Okay, good morning and good afternoon, depending on what time period you start this. I'm going to do my best to try to complete exercise 6-8 using this recording tool here. Bear with me, I'm more used to using this for my computer applications classes and my web design than I am so much for business. But I know that this is a little difficult exercise, and I'm hoping that maybe I can talk you through some of this using this device. So, what you're going to see I have open here is the actual transactions or the source documents themselves. So you're not actually seeing the written transactions, rather you're seeing the actual receipts, just as an accountant would if it was coming into the business. So what I've done, and hopefully you did yesterday as well, we talked about it at least, was to number each of the transactions. Remember, these transactions have to occur in chronological order, meaning they have to occur in the order of the date that they occur in. So I've started with transaction number 1, and let's take a look at that. And I apologize in advance. When I copy these over to a printer, they really don't show up as well as you'd like, but you do have the copies available to you in the front of the classroom on the table, and you can look at them that way, but I'll do my best. So what we've got here is the first transaction, or the first one, and that's right here, okay? And it's receipt 435, and it is Showbiz Video received cash. So what happened here is Showbiz Video received cash. What for? Well, it says right down here, it says we received cash for our VCR rental revenues and our videotape rentals. So basically look at it like this. You are the owner of a video store like Family Video, and people come and give you money over the counter, and you rent videos, and you also rent out some DVD or VCR players as well for these people to watch their movies on. So that's what this is all about. So what I'm going to do is I'm going to talk about analyzing that transaction. So let's go ahead and do that right now, and you're going to see the first thing I did was I listed the date. I also listed the account cash and bank. And why did I list cash and bank? Well, we received cash. Cash is an asset account. Because it is an asset account, okay, it is increased on the debit side. And remember, debits always are placed first. Second step, type in the description cash and bank. The third step is to write the debited amount. In this case, it's $3,400. So I want you to think about to yourself, well, what's the next account? Well, we made money. What did we make money from? Well, there are actually two accounts. I'm going to show those to you here in a moment. The first one is VCR rental revenue. Okay? So if we go back and we look at that source document, you see at the bottom it said rental revenues for $1,900. That's one credited account. But if you notice, there was actually two. This is new to you. The next account was videotape revenue, and that was for $1,500. Okay? So we actually have two accounts, but just one source document, and that is receipt 435. You might be asking yourself, where in the world did he come up with these accounts? Okay? These accounts come from the blue transaction, again, also available to you in the front of the classroom. But I got those right here. Excuse me for that. And you'll see that the actual accounts, VCR rental revenue and video rental revenue, are from the general ledger here, as well as the account cash and bank. So again, taking a last look at that, you can have multiple accounts under one posting. All right, this is the first step. You can now move on to the second transaction, which occurred on the 3rd. Okay, let's take a look at our second transaction here. Our second transaction is right here. And again, I apologize for the quality or clarity of it, but what I'd like to show you in this is that this is a check stub. Okay, so the check would have been attached to this. They tore it off at the perforation, and the amount of the check is right here, folks. Okay, the amount of the check is $325, and it was written with check number 1250. So that's our source document. Now, who wrote the check? Well, we did. Who did we write the check to? Washington Repairs and Services, for the amount of $325. You know, if I was to stop and think about it, I'd probably be like, well, they probably did some repair work for us, okay? And I wrote a check. So we know one of the accounts is going to be cash and bank, okay? And my cash is going to go down. All right, the other account, you kind of look at this general ledger and you're like, well, what's my other account going to be? And if you look at it a little bit, you'll see that we have an equipment repair expense account. That seems to be appropriate. So we'll return back to the actual general journal. And you will see here, I have equipment repair expense. This is my debited account. Notice on my board, expenses increase on the debit side. Therefore, it's first. The third step of posting, write down the dollar amount. Next, how do we pay for it? We wrote a check. Cash and bank's affected. Cash and bank's going to decrease by $325. Decreases in asset accounts occur on the credit side. Lastly, our source document was visible in the top right corner of that check. It was check number 1250. This completes your second transaction. You're now ready to move on to your third transaction. Okay, let's take a look at our third transaction here. Our third transaction is this transaction that I'm poorly highlighting. This transaction indicates that it is an invoice. This tells me right now that that is my source document. I remember that invoices are typically accounts that either I'm going to be receiving money or I'm going to be paying out money. It does not involve cash. It is typically an account done, or typically a transaction done on account. Now, who's this going to? Well, that's going to us. So we owe somebody money, right? It's going to us, Showbiz. And who's it coming from? Palace Films. Okay, so I'm probably going to have a payable account to Palace Films. But what are we buying from Palace Films? And we take a look at it. And again, it's really not all that clear, but it looks like I'm buying some videos of some kind. So why don't we go ahead and take a look at the general ledger and take a look at what accounts might be acceptable for this. Again, how are we buying it? Well, we're going to buy it on account. We're going to owe somebody money. Who did we owe it to? It was owed to Palace Films. And again, you can find that in the top left corner of that source document. And what are we buying? Well, we looked through this a little bit, and I guess to me it looks like we're probably going to buy some videotapes that we could put into our store and then probably use for sale and rental revenues. So we're buying videotapes from Palace Films, and we've agreed to pay them later. So why don't we go ahead and take a look at the transaction that's going to occur with this. All right, this being the transaction that occurred on the 5th of January, and I said that we had probably bought some videotapes. And the value of the videotapes was a total of $400. Please make sure that you look. It includes both the quantity of 40 and the quantity of 4 on that invoice. Okay, $400 worth of videotapes. And how did we pay for it? Well, we haven't paid for it yet. We're going to pay for it later. All right, so we have an accounts payable, a liability account. It's increasing. Again, increases in liability accounts occur on the credit side. That's why this is the fourth step. The fifth step is to, of course, write down the $400. All right. And last, we need to include our source document. And in this case, our source document was that invoice, PF32. All right, great. This completes our third transaction. Let's go ahead and move on to our fourth transaction. All right, our fourth transaction. I'm going to tell you what, this one's a doozy. It's going to take a little bit of thinking. I want you to really pay close attention to our invoices, to pay close attention to our source documents here, and you're actually going to notice there are two source documents here, okay? Two source documents dated for January the 7th. Here is source document number 1. This is a check stub. It is a check stub in the amount of $600 payable to New Media Supplies, okay? We have another source document, and it's right here. All right, this is an invoice. Invoices tell me we've agreed to pay for something later. It also is to New Media Suppliers. Okay, so let's talk about what happened. I'm going to try to break this down for you. All right, what happened was ourselves, okay, we are Showbiz Video. We went to New Media Suppliers and said, hey, we need some equipment. All right, we need some video equipment. And they said, well, what do you need? And we said, well, we'd like some VCRs. All right, we need some TVs, and we need some camcorders. And they said, no problem, sir. The total is going to be $2,600. See where I got that number right there? Okay, so if it's going to be $2,600, I told them, hey, look, I can give you $600 right now. And they said, hey, that's not a problem. So you know what I did? I wrote them a check for $600. Okay, but if the total bill was $2,600, I still owe him some money, right? How much do I owe him if I gave him $600 and I owed $26,000? Well, I still owe $2,000. So, what are we going to have here? We're going to have multiple accounts. Okay? We're going to have paid some cash up front, and we've agreed to pay for the rest of it later. Very similar to like a down payment on a car. So let's take a look at our accounts for this exercise and look at our general ledger. Well, we agreed that we're going to have paid some cash, $600 worth. We also agreed that we're going to owe the New Media Suppliers Company some money. Well, when you owe money, it's a liability account and it's a payable account. And we also need to understand that what we're buying. We're buying some video equipment, and you can find that right here. So these are the three accounts, very similar to the first transaction. We're going to have three accounts affected here. Okay, so let's take a look at these then. If we go ahead and break this down, let's go to our general journal, and let's take a look at this. The first one, video equipment. That's what we agreed to buy. Okay, we agreed to buy $2,600 worth of video equipment, and I told them that, hey, I can give you some money right now. So I wrote them a check for $600. I still owed them $2,000. So I have a payable account or a liability to NMS, New Media Suppliers. Well, folks, just as you can have more than one debit and more than one credit, you too can have more than one source document involved in a transaction. And in this case, our source documents are invoice 101 and the check stub for writing out the check of $600, check number 1251. I know that's kind of a complicated exercise, but I hope you were able to kind of figure that one out. Okay, let's begin our fifth transaction, all right, which you can see occurred on January the 10th. This too is an invoice. Okay, and taking a look at this here a little bit, it looks like the Spring Branch School District is going to owe us some money. So we are sending this invoice to Spring Branch. They owe us money. Why? Because they rented 18 videos from us about some government and history series. Whew, exciting stuff. So with that being said, all right, let's take a look at what kind of accounts we can have affected here. All right, so we're going to go over to our general ledger, and we know that somebody owes us money. All right, and so that's a receivable account. And who owes us money? The accounts receivable for the Spring Branch School District. All right, they're going to owe us some money. In fact, they're going to owe us $1,800, if you notice that on the transaction. Okay, so then what did we do to get this money? Well, to do something for money, it's a revenue, okay? And so therefore, we're going to call it video rental revenue. Those are going to be our two transactions. So let's take a look here at our transactions. And this account, again, occurs on the 9th, or I'm sorry, the 10th. This was the 10th. And the debited account, accounts receivable, is an asset. All right? And that is to the Spring Branch School District. You'll see I abbreviated that there. All right? That is for $1,800. Increases in asset accounts are recorded as debit. So we're waiting on our money from the Spring Branch School District. And why did we get paid? Well, we did a revenue. We did a job for them. We gave them some history and government videos. All right, so there's some revenue involved there. Revenue is a temporary account. When revenue accounts increase, they increase on the credit side. And we have a source document. They owe us money, so you should be able to answer the question. Okay, that's an invoice when somebody owes money. And the invoice number was 1650. Okay, you've completed the fifth transaction, which occurred on January 10th. You're ready for the next transaction. Okay, let's take a look at our sixth transaction here. Okay, this is a check stub. Okay, and it's in the amount of $750. This check was written on January the 12th, and it was written to Computer Horizons. So we wrote a check for $750 to Computer Horizons. And so you got to kind of ask yourself, why would we have wrote a check to Computer Horizons? Well, we're paying off an amount that we once owed the Computer Horizons. All right, so we are paying them off. All right, so we're paying down our accounts payable. How are we going to pay for that? Well, that's going to be a cash and bank account, check number 1252. So let's just go over here really quick and take a look at our general ledger. And we agreed that our credited account is going to be cash and bank. All right. And we're paying down the amount, all right, of the accounts payable account to Computer Horizons, who we owed money to. So we owed them some money for some equipment we may have purchased or something along those lines. Let's go ahead and take a look then. So on the 12th, we list the date and we list the accounts payable to Computer Horizons CH. Again, a decrease in a liability account is a debit. Debits always go first. We decrease our cash and bank as we wrote a check to pay off the amount that we owed Computer Horizons. Decreases in asset accounts occur on the credit side. This was a check stub, so therefore it is check 1252. That can simply be found by looking in the top right corner of the 6th transaction. All right, you've completed that transaction. You may now move on to the transaction for the 15th of January. All right, we're now going to begin taking a look at our 7th transaction. We will see that as a receipt. Receipts typically indicate that it is a cash deal, okay? And the nice thing is it says cash sales. That kind of gives it away a little bit. And here's our company logo right here. Tells us that it's from us. So what did we do? Well, we made some money again, okay? And it's good to make money. That's the whole purpose of business, right? And how did we make our money? The same way we did earlier. We sold VCR rental revenues and we had videotape rental revenues. So this should look very similar to the first transaction. So what I'm going to do is I'm going to head on over here again, just take a quick look, and we know that we're going to have cash and bank affected, and we got some revenue affected. We have video rental revenue, and we have VCR rental revenue. All right, so let's go ahead and head on over to our general journal and take a quick look at that. And again, this transaction occurred on the 15th, and we have a debited amount. Debited amount. What's going to increase? Well, our cash and bank increase. We put money into our cash. An increase in an asset account, such as cash and bank, is increased by a total of $5,600. A total of $5,600. But there's actually two revenue accounts. The first revenue account was VCR rental revenue, and that was for $4,400. All right. Our second rental revenue came from video rentals, and that's videotape rental revenue, and that amount was $1,200. You notice that when you add those two accounts together, it equals $5,600. We have a source document receipt 436. Okay, you can now move on to the transaction for January the 18th. Okay, so we're going to start our 8th transaction, which really I just made a mistake. This is actually our 8th transaction. Okay, our 8th transaction occurred on January the 18th. Okay, and you can see that right here. And we wrote a check. We wrote a check for $100. So I apologize again for getting my 8 and 9 mixed up here, but bear with me. We wrote a check for $100, and it was check number 1253. And who did we write the check to? Clearview Window Cleaners. I apologize that these transactions are a little fuzzier. I cut them and paste them off of the second page so I could put it all on one page for you. And why did we write a check? For some maintenance. So let's think about this a little bit. We wrote a check to Clearview Window Cleaners for some maintenance. Simple enough, right? So let's go ahead and take a look at our general ledger accounts. And if we wrote a check, we know for a fact that the asset account, cash and bank, must be affected. And we also know that we probably have an expense account. And maintenance expense seems to be appropriate. So let's go ahead and move on over to our general journal then at this time and take a close look at this. And we know that the date was January the 18th. We had some maintenance expense covered, and that's actually for $100. That's my fault. We'll go ahead and fix that right now. The maintenance expense was for $100, and it was paid for with cash and bank, $100, and we wrote a check 1253. Hopefully that transaction wasn't too confusing, even though I seemed to botch it up pretty good. You can move on to your last transaction. Okay, let's take a look at our final transaction, which again, I apologize. This is actually the final transaction I'm highlighting right here. This is transaction number 9. You can see what has happened here is that we have written a check for $1,000. The check is number 1254. The check was written on the 25th to the New Media Suppliers, and it says for, that's the key word, on account. So what are we doing? We're paying off the New Media Suppliers Company, probably from the transaction that occurred on January the 7th, if you wanted to look back up on that, okay, where we bought some video equipment. So we're paying $1,000 back to the company we owed some money to. So let's take a look at our general ledger accounts really quick here. All right, we're paying for something with cash. We wrote a check. We know that the check is number 1254. And who are we paying back? Well, we agreed that we're paying back the New Media Suppliers. So there are the two accounts. If I'm paying down the amount of money that I owe to somebody, all right, if I'm paying down the amount that I owe to somebody, it's accounts payable. Accounts payable to the New Media Suppliers for $1,000. How did I pay for it? Cash and bank. All right, a credit occurs on the right side. And again, how did I pay for it? Check number 1254. Hey, I hope this really helped you out. You'll have to give me some feedback when I get back to class. I hope you all have a really nice 3-day weekend, and I will look forward to seeing you all on Tuesday. Take care. Have a great one. Bye.